everybody, Josh Sigurdson of World Alternative Media here, and I am joined today by Tim Picciott, and we have a lot of stuff to talk about. This is a crazy day for the stock market. Dow is down as we speak 2.52%. Dow futures are down 1,000 points from Sunday night highs, 700 points today alone as I report this. The S&P is down 2.4%. And man, there's a lot to go into. So first, because we haven't had a chance to talk with you on this channel before, Tim, can you just briefly introduce yourself to the audience and let them know who you are?
Hey, well, it's a pleasure being on, Josh. I'm Tim Picciott, certified financial planner. I was probably one of the youngest people ever in America to get that. That was actually the designation that G. Edward Griffin, who I guess you had on a few days ago, that was the designation he got before he wrote Creature from Jekyll Island. So just only wanted to point that out just from like a knowledge standpoint, but I've been in the markets now for a little bit over a decade, started the day Lehman Brothers crashed, and I probably also have the distinction of being the first financial planner in America to lose their job over refusing to stop talking about blockchain when I spoke at the Dollar Vigilante conference at Acapulco, Mexico last year, and I'll be back again this year. So highly recommend everyone checks out Acapulco and the Dollar Vigilante Summit. And so that's a little bit about me. Into crypto market. I'm into a lot of the same exact stuff you guys are into. So I'm glad that we're able to hook up.
Well, yeah, I put out the word on Facebook because this is a huge thing that's happening right now in the markets. We've been watching, a lot of speculation, not fundamentally driven, just, speculation and very bubbled markets over the last few years. A lot of people get really glassy-eyed about it, and it's unfortunate because we've seen this happen before. Actually, as I speak, the 2 and 3 year yields are higher than the 5 year. So we are seeing a partial yield curve inversion as we have predicted in the past. And at the same time as well, according to the Zero Hedge article, Toll Brothers shocks with 13% plunge in orders as California falls a staggering 39%. I mean, so the real estate market is, getting some backlash. We're seeing this happen in the stock market today. What do you think about the most recent news as we see the Dow and the S&P go into a tailspin?
Well, a lot of it has been honestly surprised it's really taken this long because there's some major headwinds that you're never really going to see anybody talk about on, I like to call it CNBS instead of CNBC. But on CNBC, you're never going to hear somebody mention, like, to me, the major headwinds are you've got about $600 billion worth of bonds that the Federal Reserve are going to be selling next year. That's $600 billion. Then you've got, about $1.2 trillion was the actual deficit for fiscal year 2017 or fiscal year 2018. They like to say it's only, I want to say only in air quotes here, $800 billion, but they don't count all the different natural disasters and a whole bunch of stuff doesn't go into the real number. So right there, you got 1.2 trillion that the Fed or Treasury is going to have to issue in Treasury bonds next year, 600 billion that the Fed is going to be selling off their balance sheets. And then the other big enchilada is that this month will be the last month that the European Central Bank starts doing their quantitative easing program. And so for me, if traditionally, who was the largest purchaser of the bonds? It was the Fed. Well, now they're the largest seller. Who was the second? It was China. Well, now we're in a trade war with China. Who was the third largest purchaser? It was Japan, and they're one of the most indebted countries in the world. So you see all these different headwinds that are going on. And yeah, Trump could do some different steroids to the economy in the short term to boost things up. And yeah, there can be a little trade deal pause here or there, but none of it really matters and to me, the bigger story is the bond market. And even yesterday, one of the interesting things when the market was soaring yesterday, I forgot what it ended up yesterday, but at one point was up over 500 points. And all throughout that, the bond market was actually going down, the yields are going down, meaning people were on the one hand, very bullish on the economy. It's probably short-term speculators and traders and computers making the trades anyways. But on the other hand, you had people pouring into the bond market as well. So, it's two dichotomies that you usually don't see going on at the same time. I was on Ernest Hancock's program earlier today before the market even opened, talking about how, I don't really care what these trade deals amount to, which was the impetus for yesterday's big market rise. But at the end of the day, this is all bluster. On Trump's Twitter account, I'm not there right now, I can scroll to it, but he had a tweet from earlier this morning that says, "I'm a tariff man. When people or countries come in to raid the great wealth of our nation, I want to make them pay for the privilege of doing so. So you're allowed to rate us as long as you pay for the privilege of doing so.
This is funny because I think Justin Amash responded, "Well, I am Liberty Man." This is what's so insane is that these problems are perpetually created by the Fed, by government, by centralization, and they think that they're going to come in and save the world from these problems they created by creating more problems. I mean, we got the plunge protection team at the Federal Reserve, and we've got all these statements by Powell lately, this trade war. We got basically, I want to kind of go into this a little bit. Who's buying these 10-year bonds and stuff with such a tiny, minuscule percentage of gain? I have an idea. I'm pretty sure it's the Fed. Who's manipulating these markets? I'm pretty sure it's a Fed, because there's no reason that this should have perpetuated as long as it has. There's no reason that these markets should still be stable whatsoever. I mean, we have seen vast bankruptcies coming from the banking system. We've seen completely devalued currency, and we've seen massively speculated markets leading out from 2008. It never really ended. And we have these markets that are so incredibly manipulated. There's no reason for them to still be on two legs. And I do believe that this all goes back to the Federal Reserve's manipulation practice. What do you think?
Yeah, so one of the biggest things that people aren't aware of out there and a risk to people's portfolios, and it's certainly not us buying the bonds. We have no bonds in any of our client portfolios. Mm-hmm. But right now, there is something called interest rate risk. And what people aren't aware of, and what could really come back to bite a lot of investors, because no one's really experienced this who's currently retired or who is about to retire, has never really experienced a rising interest rate environment. I mean, pretty much since the time that you and I have been alive, Josh, the rates have been going down, down, down. When the rates are going down, it increases the value of the bond, because if you could earn, 8% and now you can earn 4%, well, it's going to make the one that's earning 8 worth relatively more. On the flip side of that, if, you were in a bond that was paying 2%, now you can go out and get 4%. Well, who's going to want to buy your 2% bond? Nobody. So there's a discount to it. And there's some geeky math that gets into this, but long story short is if you had $1 million in bonds in a 10-year bond and rates were only to rise 1%, your underlying value of your portfolio would drop 10%. So your $1 million, you turn it into $900,000. If rates were only to go up 2%, and we're not talking about crazy far-fetched scenarios here. We're only talking about the rates going up 2%. Then your $1 million would turn into about like 780,000-ish because
wow, what a deal.
And a lot of people are just not aware of what is going to happen to their portfolio. And you got all the pension funds right now who have to have a certain amount of their pensions into these bonds. And so they have a huge amount of interest rate risk and all the other risks. But I know we've only got 15 minutes today, so this is something I could spend hours on. But there's definitely some manipulation going on. Rob Peter to pay Paul, and even our bailout that happened in 2008, 9, 10. A lot of that went to Europeans. So I wouldn't be surprised now if there's Europeans who are now helping us and paying us back by doing the same favor. But there was a Zero Hedge article from earlier this year that talked about how the Fed had a short VIX position, aka they were betting against the volatility index. And so there was if you type in like Jerome Powell VIX index, it was a January article where he talked about this. And just 2 weeks after that, the VIX absolutely blew up. So it's almost like they're the worst run hedge fund in the world, that they're betting against the VIX in Jerome Powell's own words. And then they also had long-term bonds, meaning that they're going to be susceptible to the interest rates going up. And that's a story that a lot of people aren't aware of. And it really pains me because I know a lot of people are going to think they're safe. They're going to keep their money in bonds. And by the time they get their money back, all the horses are going to be out of the barn because of the impending inflation.
Yeah, I remember actually we reported on that story back in January or February. I remember that very well. And, this is, you mentioned the pensions, and I mean, we could go into all this all day. We got a short amount of time, but I mean, the pension shortfall is just astronomical. Going long term, looking at the future at trend setting and certain studies that have been done on the pension shortfall going up to the year, I believe, 2050, they're looking at a $400 trillion worldwide shortfall. I mean, that is just unthinkable. We've got, this all bubbling up in so many different markets, from real estate to bonds to, well, it's what they call the everything bubble for a reason. The derivatives bubble is multi-quadrillion dollars worldwide, estimated. So, I mean, it's coming to this precipice, and it should have happened long ago. And the more it's put off, the worse it gets. And I think it's just this crime of centralization and manipulation, creating a problem, so they bring in more centralization, more manipulation to prop up the system that should be crashing to the ground. And Ben Bernanke, I believe it was 2002 or 2003, talked about they will do anything at the Fed to make sure that these markets are propped up. They will do anything necessary to continuously create fake prosperity. This is a huge problem. And of course, this is what happens when you have for example, master classes taught by Paul Krugman and Karl Marx is the most assigned economist in U.S. college classes. This is the end result, folks. Tim, as we wrap it up, where do you think this is going to lead in the near future? I mean, it should have come down a long time ago. You can't put a date on it, but I mean, this cannot be prolonged much longer. It's just so insane.
Yeah, there's a lot you said that we can touch on. Speaking of Paul Krugman, it was either him or Bernanke who said that I think it was Krugman who said that we need to have a real estate bubble to replace the .com bubble. I can't remember which one of those said that. It wouldn't surprise me if it was Ben Bernanke or if it was Paul Krugman. But yeah, the pensions right now, they're about 35% underfunded, and there's just so many risks that are out there right now. You've got there was a Zero Hedge article a few weeks ago that talked about how a record amount of assets are negative. So this is a very strange time we're in right now, where almost nothing is a good buy, and there's just so many different risks that are out there, and some of the biggest risks from from like a financial planning standpoint, which is the world that I come from, is, I mentioned the interest rate risk. That's the risk of, what happens to portfolios when the rates go up. But then you also have, I'm doing this off the top of my head right now, you also have sequence of return risk, where a lot of people think, oh, well, this investment averages, 10% a year and I'm going to be safe. Well, the problem is, if you're number one, you're down 40%, you're going to have to go up, and you're taking, let's say, 4% withdrawal a year, you're going to have to go up like 120% over the course of the next 3 years just to get back to even. And so people aren't aware of that. And then you've got, inflation risk, deflation risk, taking too much money out of your principal, withdrawal rate risk. And there's this whole calamity of, I like to call it this whole perfect storm that I think is going to be basically is going to wall up a lot of the baby boomers' retirement. So what I'm trying to do, personally and for my clients, is to help them hedge against as many of these risks as possible. Because ultimately, I think that, even though the stock market is going down, I think eventually there's only going to be a certain limit to how much they'll let it go down to when they start printing money. My guess would be that they don't want to help out Donald Trump. They're not going to want to have him do any favors. He has criticized the Fed. However, the criticism, in my opinion, is him being a hypocrite, saying, how come you're not keeping the bubble going, as opposed to saying, you guys are a den of vipers, and by eternal God, I should rout you out, like Andrew Jackson famously once said. And so, so if you really want to make America great again, you've got to end the Federal Reserve. You can't play ball with them. In June 2016, Trump said this is a big, fat, ugly bubble. And now if I try saying that, it's a big, ugly bubble, people call me, some effing liberal or something. So at the end of the day, there's things that you can do now to protect yourself. If you're doing those things now, the market is still relatively high. And then the last thing, not just to give a quick plug, but, I've got different podcasts at thelibertyadvisor.com. Then also, we also are doing crypto IRAs for people as well, and some advanced tax planning strategies for people that made a lot of money on crypto, and how they can legally do the same tools that the big boy used to legally avoid gains on their crypto. So that's just a little bit about me. I know it's the first time on the channel, and I really appreciate you having me. And I'm sure we'll be in touch as this economic situation continues to further deteriorate over here.
Yeah, absolutely. And we'll definitely be having you back on soon to talk more in depth about these issues. But I mean, this is a really big news story. People need to take caution and be independent, self-sustainable, financially responsible. Financial independence is incredibly important, folks. And we can't continuously be dependent on these systems that are dependent on our dependents. I do think it's important to point out that when we see these massive issues, we see people piling into this system, speculating, hoping for the best when they don't understand the system at all. And that's where we end up with a lot of people becoming impoverished, a lot of people losing everything they have. And we've seen that so many times before. We're seeing things that are very reminiscent of 1929 all over again. And people will say, well, that's fear mongering. No, it's truth. We see history repeating itself, and we need to take action and be prepared. And the more prepared we are, the better we are off in the long term, instead of succumbing to the same thing that history has repeated so many times before. And you mentioned, Tim, just different kinds of centralization playing against each other. Donald Trump criticizing the Fed, but then saying we need this other kind of bubble. And I just find it incredible how it's the same thing as we see with, collectivism, different flavors of collectivism fighting against each other for what's the best form of collectivism. And then we have these central planners fighting each other over what the best form of central planning is. And I think it's really telling. And I think individuals need to decentralize and rule themselves and understand how this market works, educate themselves, because a well-educated populace is a strong, independent populace. So thanks for going into this with us, Tim, and we'll make sure to have you back on again soon. And of course, you do a lot of work with Ernest Hancock, so everyone should always can you give us one more plug before we close it off for all the work that you're doing?
Yeah, you can find out more about me at www.thelibertyadvisor.com. I was initially called the Libertarian Advisor, then I got pissed at them too. So, it's about, liberty. It's not about any parties. But there you can find information on podcasts, different live streams that I do. I've got a wealth management business, and then where we're helping protect people's portfolios using different put options to help protect the downside and all the different risks that we had talked about. And also, I'm probably the first advisor in America to roll out with crypto IRAs, then also doing the advanced estate planning for people who, let's say you made a few $1 million off crypto and you bought it off Coinbase or you bought it off Kraken and the man knows that you have it. We do different trust type strategies where like when Bill Gates and Warren Buffett said they gave away all their money, or even when Charlie Lee said that he donated all of his Litecoin, he didn't really. There's different trust strategies that they use where they put their money in these trusts, they pull money out from it, and they get a tax break over here, and the tax break offsets over stuff. Well, anyways, if any of that interests you, I'm the guy. So there's probably very few financial planners out there who would be take one for the team and have to lose their job over recommending crypto, and B, that's in the space where I've got a sign somewhere kicking around here. I've got a signed copy of Creature from Jekyll Island because if you don't understand that, then you really don't understand anything. And there's so many advisors out there in America who, frankly, this entire conversation we had would probably roll their eyes or have no idea what we're even talking about, because to them, it's not good business to, I don't want to say that we're fear mongering, but, to tell people that, hey, there's a fire and to do something to get ready for that fire, to me, isn't fear mongering, it's trying to prepare them. So again, I hate to give the huge long plug here, but the libertyadvisor.com, there's spots where you can schedule with me, or you can, and then also we do have a special before the end of the year. So rates are my personal rates are going up January 1. So we're having no setup fees on our crypto IRAs for the rest of this year. Doesn't mean you actually have to, N.M. Rothschild that said the best time to buy is when blood in the streets. There's a lot of blood in the crypto markets. These things take about a month to set up. So even if Bitcoin or any of these other cryptos were to go down substantially from here, it's not like, hey, you can just boom, jump in and get in it. Now is the time to prepare. It takes about a month to set these bad boys up. And appreciate you having me on, and look forward to speaking with you again.
Absolutely. It's an infant market in the cryptocurrency space, folks. So we'll be continuing to cover all of that and continuing what's happening, or to cover what's happening in the stock markets and with this vast central planning cartel that we're seeing from the central banking system worldwide. It is an everything bubble. It is a global bubble. There's problems all over the world, and we'll continue to report on that and try and give you as many solutions as possible. Thanks for going into this with us, Tim. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored on YouTube, as these guys come in and flag all of our content as hate speech. Also, check out our Bitcoin address below as well as on the screen for you to scan if you please. And also check us out at steemit.com. We're at Josh Sigurdson. It's a future of social media where you get paid in the upvote of your post in cryptocurrency. Steem, that is. So make sure to check us out there. Make sure to join us at Anarchapulco 2019 with people like Ron Paul, G. Edward Griffin, of course, Jeff Berwick, Vid Jedlicka. So many incredible speakers are going to be speaking. It's just a massively growing event. It is something you have to see to believe. So make sure to check it out below and save money on your tickets by using promo code WAM, that's WAM, and I hope to see you there. Also, check out our newsletter as we are getting demonetized and censored and all that. We don't know what comes next, so We have an email, worldalternativemedia@gmail.com. Send us an email with subject line yes, YES, and we will include you in the newsletter where we will continuously keep you updated. So until next time, thanks for watching, everyone. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Thank you.